Hey, welcome back. You're tuning in to howtoplaystock.com. My name is Kepley. Today is November 28th, 2017. Hope you guys had a good Thanksgiving. In today's video, I wanted to cover the topic of investing strategies, okay? The reason why I'm shooting a video on this because I'm reading quite a bit right now, some great investing books written by some very wealthy people, and just kind of sparked some ideas in my head that I should probably shoot another video on my own investing strategies, just to let people know kind of what I'm doing and what helps me keep focused and stay on track when it comes to my investing for the long term, for passive income and for speculative type investments, okay? So you don't have to do exactly what I'm showing you in this video. This is my own strategy. You need to make your own financial decisions and make wise investments, do your research, before you decide to lay any money on the table, okay? But this is what I'm doing, and this is really what works for me because it keeps me away from having to get distracted by all the investments that are out there, all the people out there who will throw something at you and say, hey, you ought to look into this, you ought to look into that because this is going to get so many returns over the next, 2 or 3 years. And honestly, when people do that, they have no clue. Nobody has a clue as to what's going to, have massive returns in the future or massive losses in the future. Nobody knows for sure. So to stay clear of that and to stay focused so that you're not getting distracted and losing your money, you need a plan. You need a strategy, and you need to just stick with that, okay? Again, it's amazing how many people that I will talk to about investing who, will ask my opinion on certain investments, and then when I start talking about it, they'll interrupt me and they'll tell me, what they were told by somebody and how I might be wrong and I need to look into this or that, and that's fine. Everybody has their own opinion. I'm just shooting a video today on my own strategies. Because my own strategy really is not an opinion. I'm taking this from historical facts of the stock market and, just looking at raw data from historical patterns from the stock market and developing a strategy and plan around that. Okay, not to mention, I'm trying to build a plan based upon the shoulders of giants, guys like Ray Dalio, Carl Icahn, Warren Buffett, Kyle Bass, Peter Lynch, guys like that, okay? So these guys know what they're doing. They've been around for a long time. They've seen the ups and downs in the markets, and I tend to listen to those folks more than I do people who just might be your average, your average Joe off the street, okay? So getting started, step one, what you want to do, and I tell everybody this and recommend this to everybody, is get out of bad debt. Okay, and I say bad, I highlighted bad here because there's a difference between bad debt and good debt. Bad debt would fall into the category of the three letters RRD. So it's rust, rot, depreciation. If you have investments out there that rust, rot, or depreciate, they're not putting money in your pocket. Therefore, it'd probably be a good idea if you pay those off and get out of debt. Okay? And it's amazing how many people, again, that I talk to on a weekly basis about investing who will try to pick my brain or ask me for opinions. And I'll tell them, all you really need to do is get started. And then they'll turn around and go, well, I don't have any money. I live paycheck to paycheck. It's amazing. I mean, I'd say 95% of the people I talk to about that, and I tell them, just get started. Just that's number one. You need to get started. Well, I can't because I don't have enough money to buy up 2 or 3 shares of a stock. I mean, these people don't even have $400 of emergency funds in case their car goes out. And it's sad. It really is, because people just, they don't have a plan. They're just floating through life. And again, part of that is partially due to bad debt. So get out of debt. Because once you get out of debt, once you get out of bad debt, then you have money. And when you have money, you can invest in pretty much anything, okay? Number 2, invest in insurance and have cash on hand. Okay, so once you pay off your debt, you want to have insurance, and I talk about this in my investing course. So if you want to know more about the insurance aspect of investing, go ahead and subscribe to my investing course. It's a free course, doesn't cost anything. You can click on the link in the description here for the beginner's guide to investing, and I go in and I explain the insurance and how to get everything set up properly so that you can stay focused on your main mission, with building wealth. Okay, so it's important. You want to have insurance first before you even start buying up one single stock or option or whatever it might be that you want to do. The other thing you want to do is have cash on hand. So again, like I was saying, most people I talk to don't even have $400 to their name, so that if their car goes out on them, they can lay cash down on the table and have it paid for, and they don't have to put it on a credit card and up their balance on their credit card, which would be considered bad debt. Okay, they don't know how to, they don't have the money for it, and so it's wise to have at least, probably I'd say, $1,000 cash on hand that's liquid. It can be in an account like a savings account or a broker account for whatever it might be that you want to maybe possibly invest in, but it needs to be liquid. So if you need it, you need to be able to sell whatever it is that you're in, or have it locked away in a safe somewhere where nobody can get to it. You just need cash on hand. Okay, that's really important, especially when you're first starting out with your investing. Number 3, this is the next step. So once you got your insurance and you got your cash on hand, then think about setting up your retirement account, which would be like your IRA. You may have a 401k with a company, which is great, but again, there's so many things that you're not aware of with 401ks. I'm not saying you individually that's watching this, but most people are unaware of hidden fees that are associated with their 401k. A lot of people don't even know what they're invested in and what the options are from the company who offers the 401k. A lot of people think that your 401k is free and that you don't have to pay for that somehow. Well, that's a big mistake, because every company that offers a 401k, you have to pay for that. It costs you something, so you need to figure out what costs are associated with that, what kind of funds they might recommend. Currently, for myself, I'm the company that offers 401ks for me. I already looked into all their funds. I wasn't impressed with any of them, so I just went ahead and took the generic account that they enroll you in, and I contribute the minimum amount to my 401k because I get better returns, and I know what I'm doing when it comes to my investing. My strategy and approach. I trust that much more than I do my own company's 401k that they have set up for me that I have to pay for so that I can get returns. Okay. The only reason why I'm taking advantage of a 401k is because the company, at some point is going to match me, the money that I'm investing in it. So to a certain percentage. So it's pretty much free money. Okay, and that's the only reason why I'm doing a 401k. Outside of that, I could really care less because I know what I'm doing. I know what stocks to go into. I know the allocation that I need for my retirement account. And I've got a plan. So number 4, after you've got your retirement account set up, okay, and you're contributing to that. One more thing before we go to step number 4. On number 3, when you're setting up your retirement account, okay, and this is just a suggestion, but you might want to make it automatic. Okay, so make sure that your investments are, automatically withdrawn from your checking account and are going into your retirement savings account. Okay, because when it's automatic like that, you're not looking at it. It's in your account. It's ready to go, and you can build wealth over a long period of time and keep your emotions out of it while you're investing, okay? And that's pretty important when you're investing, because you don't want to let your emotions get into your nest egg, and then you start panicking and selling when markets dip and whatnot. Just stay in, and the best way to do that is to make sure everything's automatically going into that account, and you're buying up investments and assets through your account, just automated. Completely automated. Number 4, after you've got your retirement account going, you can set up an individual account for your broker or through your broker. And your individual account is specifically for creating passive income and for speculative investments, okay? So basically what I've got going is the individual account. I've got a few index stocks that I'm in where I'm buying up the broad markets. And, it's creating passive income for me, so it's paying out a paycheck to me monthly. If you're interested in knowing more about those, I can certainly shoot a video on that and show you why I'm invested in those and why I decided to invest in it. Then you got speculation, okay? So right now I've got over $1,000 in an account for cryptos, all right? Because I'm playing cryptos. Cryptos are very volatile. They're going up and down. They're very risky if you don't know what you're doing. I managed to more than double my money with about $1,000. So I took the profits off the table because I thought, at least if a trade goes against me and I may lose some money, who knows? But if I do, lose some money in the future because I was wrong on a bet or wrong on a trade, and I'm speculating here. If I'm wrong, well, I didn't really lose because I took the principal amount, which is just enough that I could afford to lose, all right? So I really wasn't worried about it in the first place, but I can take the amount of money that I profited off the table and, continue trying to trade and make more money. Again, it's speculative. So if you decide that you want to speculate, make sure you play with money that you can afford to lose. So don't count on it being around a year from now if a trade goes against you, okay, and you decide you want to sell and get out. So that's my strategy. That's what I do to invest, and it keeps me focused, especially on the long term because everything's automated. Everything outside that, I'm building up passive income so that, I'm getting a paycheck every month from the broad markets. And, everybody's talking about, well, there's a depression, a recession coming, stock markets are coming down. Well, guess what, guys? That has been going on for, since the 1900s, okay? So if you're wondering if that's something that's going to happen here in the not so distant future, the answer is yes. It is going to happen. Winter always comes before spring, so just get ready, stay in the markets because they always rebound. And speaking of that, I'm going to shoot a video here probably in a couple days, and I'll show you historical data that I was talking about in previous videos and stuff like that, where markets correct and you get drops of 10%, 20%. I'll go in and actually show you a chart that I found in one of the books I'm reading, and it shows you exactly how many corrections we've had dating back to like 1929 Great Depression time frame. Okay, and I think you'll be surprised to see just how many times and how common it is that we get pullbacks in the markets, recessions, corrections, stuff like that. So it takes a lot of the fear out of the equation so that you're not selling and panicking all the time. Okay, again, you can focus on your main strategy for investing. So that's all I have for today. I hope you guys found the video beneficial. Go ahead and leave your comments in the video here if you have any questions. If you like the video, give it a like. Go ahead and share it with others. And remember, guys, income is the outcome, okay?